let's talk a little bit about what markets are doing. 0.25% lower on the Nifty. Not much of a surprise, frankly. That 26,000 hurdle continuing to be so. Let's talk about some sectors which are not doing as well. The Nifty Bank flat. The Nifty IT is where some bit of pressure is building in. But let's go across. We have Abhay Soi, who's the chairman and managing director at Max Healthcare, joining us. Abhay, very good morning. Your results were decent. Talk to us about RPOP growth. It's been very, very modest, right? 1% YOY. What's your outlook on future RPOP growth given the expansion plans that you have in coming years? Give us a sense of that.
So I think apples for apples, if I look at pre-existing hospitals, it was 7% RPOP growth. If I look at hospitals which have been added in the last 15 months, including those hospitals, it's 1% growth. But if I take those hospitals out, it's a 3% growth. So I think presently the RPOP is kind of subdued because of addition of, as you're aware, over the last 15 months we've added about 30% more capacity, both through new acquisitions in tier 2 cities like Lucknow and Nagpur, as well as the new Greenfield hospital in Dwarka and Delhi. So all of that has sort of led to RPOPs being subdued. But having said that, if you look at it, the mature hospitals, the growth has been in line with what has been in the past, which is 7+% of RPOP.
Right. And Abhay, what is the typical ramp-up timeline for newly added brownfield beds? And is the current cycle trending ahead or behind expectations?
So we added, the last greenfield we added was Dwarka, which was July last year. We broke even in 6 months. And as we speak, now it's been close to 15 or 16 months, but within 15 months, we're operating at a 80% occupancy. So it's completely occupied. I think if you look at some of the acquisitions we did, again, they are operating at very high capacity occupancy. The brownfields that we are yet to sort of unfold. We are commissioning Nanavati, Mumbai, which is a brownfield, over the next couple of days. We will be rolling out our hospital in Saket, which is the new 400 beds, over the next 30 odd days. And, so between these two is going to be close to about 650 beds. We've also rolled out 170 beds in our Mohali facility over the past month. So brownfields typically have a faster ramp up, as well as it's almost immediate EBITDA break even. So we don't expect any pressure on the margins, so to say, going forward.
And Abhay, with the NCLT approved merger of Crossley Remedies and JHL, could you explain the expected synergies and the 150 crore one-time tax impact? How does that impact your numbers? Give us a sense of that.
It's basically simplification of the corporate structure. It was a 100% subsidiary, and it had accumulated tax losses in it. In order to sort of simplify the corporate structure, we've merged it. We will have impact of the carry forward tax losses. And I think that is going to benefit us by close to 150 crores. And that's the impact that you see on the net profit line as well. Apples for apples, our net profit would have grown by 16%, but we've taken into account this one-time impact benefit that we got through taxes, which made our net profit jump by about 60% in the current quarter.
Right. And which clinical programs, oncology, transplant, cardiac, or ortho are driving this kind of higher international inflow? And how does their RPOP really compare vis-a-vis domestic?
Well, typically, people come from overseas for more acute diseases. Our typical RPOP is about 30-35% higher than our average RPOP for international patients. Although you're right, it represents 9% of our revenues, but it's also grown at 25% year-on-year basis. Last quarter, it had grown by 30-odd% year-on-year basis. So we have seen a very, very high growth rate as far as medical tourism is concerned. And we hope to see this going forward the same rate as well.
And what's the outlook on international patient contributions going forward? Is the momentum going to sustain on that count?
Well, there's no reason for it not to be growing at similar paces that it has been in the past. But do keep in mind our capacity itself has grown by 30% last year and is expected to grow by another 30% this year. So that number sort of increase of 25 to 30% of international business, whilst it's a very, very healthy number, it sort of gets obfuscated by the fact that our occupancy, our capacity is also growing by similar extent.
Right. And what is the current Capex pipeline for the second half, and how is it that it's going to be funded? Internal accruals or incremental borrowing?
Well, we, I think, spent close to 700 crores in the last quarter. We are hoping to spend close to 900 crores in the next 2 quarters. So I think from that standpoint, we believe it will be funded through internal accruals. And going forward as well, over the next 3 years, we expect it to spend close to 5,000 crores. Again, almost entirely through internal accruals.
Okay, thank you so much, Abhay, for coming in and speaking with us. Always great chatting, getting that perspective with regard to Max Healthcare. Let's see what the stock is doing. In fact, results, mind you, came out over the weekend, and the stock has moved up 2% in trade today as well. But let's go across. We